Hey, what's up, guys? So, on today's episode, I've got Brandon Fulep, who has worked both for Brandon Turner as well as Trey Stone doing investor relations and raising a lot of capital. So, we're going to talk market, we're going to talk tactics, but if you're interested in raising capital, this is a great episode to tune in for. All right, guys, welcome back to another episode. Today I've got Brandon Fulep, and we're going to be talking a little bit along the lines of investor relations. Brandon, thanks for being on, man.
Of course, man. Great to see you and thanks for having me here.
Yeah, yeah. Man, we met a couple years ago and we were both doing some work for Open Door Capital. And at the time you were just a setter. You were just dialing for dollars, man, setting
Yep.
150 calls a day. But you mentioned something that caught my attention and I feel like kind of clicked from then on after. And it was the automotive background. Man, talk to me a little bit about just like your journey, how you got into this, going from being in automotive to being in real estate, raising capital. Like, what did that transition look like?
Yeah. Well, I'll start in the very beginning. When I started with automotive, I just kind of fell into it. I graduated college 07, 08 when like the housing market and the world was falling apart at that time. So I kind of just fell into a job and started. I've loved cars my entire life. Started as a salesperson, worked my way up to a finance manager, finance director, and then life happened. I got married, had a baby, and I was like, okay, I can't be sitting here 100 hours a week behind a desk, not seeing my kids, not seeing my family. I had to kind of switch it up a little bit. And by switch it up a little bit, I mean a lot bit. We moved completely across the entire country from Cleveland, Ohio down to St. Petersburg, Florida. Kind of on a whim. We did it. My wife's family lives down here. So then we just got started. And then randomly, I just picked up Brandon Turner's book. My wife kind of went behind my back and she bought a condo for us to kind of stay in when we were coming down to Florida all the time. So she ended up buying that. I bought her Brandon Turner's book. When I She didn't read a page of it, not literally one page. I picked it up, couldn't put it down, read it, and I think the entire book in like 3 days. Then I ended up buying a duplex. Once I bought a duplex, I renovated the whole thing, house hacked it, and then ran into one of the guys who actually worked for Brandon Turner. And I was trying to sell him one of my extra vehicles. So when I did that, I finished my project of getting the duplex ready to go, turned it around, called that guy, and he got me set up with a job with Open Door Capital. Like as you said, just as a setter. I was an intern when I first got started there. So I went from top of the totem pole in the car business all the way down to the bottom. And it was great. It was just an awesome experience to learn from absolutely nothing. And then to put myself in the spot where I'm at right now, kind of just knowing kind of the ins and outs of the entire workings of a investor relations team. So it's been very, very cool, very humbling. I will definitely say that. But it's got me introduced to the coolest people. Got to meet Brandon Turner, got to meet you, Trey Stone, like everybody. It's been an awesome, awesome ride so far. So it's been cool.
Dude, that's awesome. Yeah, and for people who don't know, like there's a lot of people out there who have sold cars. And I always think it's so cool to find those people and then see what they're doing now. Because I think the industry sometimes almost kind of breeds this mentality of like, hey, you can get good at this, but then that's the only skill set you're good at. It doesn't, for some reason, it doesn't bridge the gap of realizing, man, the skills you're developing work in a lot of different areas, right? But when it comes to being a finance manager or finance director, like you have to be an absolute savage, both in terms of like skill set when it comes to sales, people skills, conflict resolution, managing people, and then managing
Yep.
all the money, right? And so I always tell people, man, if you can find someone with previous finance manager experience, you know they cut their teeth selling, you know they have the attention to detail. Like, so when you told me that, I was like, well, okay, we got somebody here. Like, this guy's a beast. What the heck is he doing setting appointments?
Yep. So yeah, like I said, it was definitely a very humbling moment in my life to do that because like I was managing up to 10 finance managers at one time, running the entire show, calling banks, doing the whole nine, and then you just basically start at the bottom of the ladder again. So and I was completely fine with it. It was a humbling moment for me, but it was a good moment because there's so much to learn in a different industry. And instead of starting at the top and being one of the managers of this, I'd rather start at the bottom because then I learned everything, every system, every type of internet program that we have, I can use and literally know the ins and outs of every single aspect of it. So it was pretty cool with that.
What was some of the maybe similarities that you had right off the bat where you're like, making the connection, like, this is just like what I've always done. And then maybe what are some of the differences? What were some of the things you came in completely blind where you're like, okay, this is totally new to me?
Yep. Sales is like kind of like riding a bike. It is really what it is because in the beginning, like I had no idea what I was doing. I was inefficient as hell. I had no idea what was going on with any of the programs that we were working with. And then, but once you start to pick it up, and then it's just like going through the car business, sometimes it's like frowned upon and everybody gives you like a dirty look that you're a used car sales guy and stuff like that. And but that's really just it's a stigma and it's not true for everybody. I mean, there's outliers, but it's not everyone. But once you kind of get back into the flow and like understand what you're doing, understand what you're selling, and just the biggest difference is being in investor relations for multifamily or single family, anything like that, you're more nurturing and informing the majority of the clients that you're working with. Every once in a while, you're going to have somebody who's been doing this for 20, 30 years that really understands everything about what you're talking about as far as returns and units, occupancy, NOI, all that stuff. But for the most part, you're just training and teaching and nurturing the entire relationship from the beginning to the end.
Yeah. Yeah. One of the big pieces I noticed was, in both environments, there's an information aspect, right? Where it's like, hey, we're getting information in front of people. The big difference I noticed was when it comes to investor relations, there's a risk analysis piece that's much more
Hmm.
prevalent, right? In automotive,
Yeah.
it's like selling something, it's, hey, here's the information, and we jump straight into decision making. Whereas in relations, I think there's this in between of information, risk analysis, and then decision making. But what I find is a lot of investor relations guys just stay stuck in information and risk, and they never actually move over to like, hey, we're going to make a decision. Whether it's yes or it's no, we're at least going to come to a conclusion. And I think some investor relations guys just stay stuck in like the information overwhelm and they try to get the risk down to zero when the
Hmm.
risk are actually going to be zero. So it's
Yeah.
just meaning, hey, Mr. Investor, we're going to get down to a certain threshold. And at that point, the risk still may be, 20% or whatever if we want to quantify it at. But we're going to get to the point where we're going to have to make a decision. Is it going to be yes? Is it going to be no? Like you just have to get off the fence. And the big mistake I see a lot of investor relations guys make is they just stay stuck in information overwhelm and it actually makes the prospect less certain on making a decision
Hmm.
and forward. And so they just say, "Okay, let me put more data in front of him. Let me put more information in front of him." I think all it does is it triggers the investor to go, "What else don't I know?" Instead of getting closer to making a decision. And that, for me, that's one of the things I've always noticed with guys that have a sales background is they understand the importance of moving somebody to making a decision rather than like I said, the big mistake I see with a lot of investor relations guys is they steer away from decision making and they almost make it normal for an investor to ghost them, to not get back
Yep.
to them. And they just
Yeah.
treat it like, hey, that's just how we're going to end the conversation is with you not getting back to me, as opposed to almost making it an expectation that they're going to tell you yes or no. What have you seen how those two play out, amongst your peer, yourself?
Yeah. What you're saying is exactly right. And that's why kind of when I was with ODC, I kind of excelled in like a group of my peers because you have to know when to make the ask. And if you're not going to make the ask at all, like the worst they're going to say is no. And like that's just what happens. And when you get used to car sales and people saying no in your face 9 times out of 10, you just try, it's a numbers game at that point. And you got to just keep going and going and going. And then eventually somebody's going to say yes. But you have to do, like you said, you just have to do the education part. But you also have to know, like, hey, is it time for me to put my foot on the gas and make this ask and see if they want to invest $100,000 with me? Or am I just going to wait? And do these people need a little bit more nurturing? And that's where I think coming from an automotive background, you really get the feel of that. Like that's one of the benefits of doing that face-to-face sales that you and I have done for years and years and years. And that put us up at the spot that we're at right now.
What does the ask look like? What have you seen as maybe two examples? What's a poor ask that some, maybe more amateur investor relations guys would say? And what does a
Mhm.
good ask actually look like?
Poor ask is not asking at all because I see so many people and like our calls for the most part get recorded. And I listen to other people's calls to like train them, train myself, or what are you saying that I'm not saying? And a good ask is, I feel like go through your pitch, get what you need out, but try to condense it a little bit because people's attention spans are only going to go so far. And by the time, if you're going to sit there for 30 minutes straight and just hammer people with details, 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 like you got to kind of plant the seed as you go along with your pitch and be like, how do you think that sounds? Does this sound like something you think about moving forward with? What is something that like is going to hold you back from this situation? One thing that's worked really well with me is 1 out of 10. Just keep it simple. Like 1 out of 10. Like right now, I've given you a whole bunch of information. We've been on the phone for 20, 25 minutes with each other. How do you feel about this investment right now? Like a one being like, I don't want to hear any more words you're saying out of your mouth ever again. Or a 10, like, give me or take my money right now. So then I play that game. A lot of times people are going to come back with a 7 because they want to be like right in the middle. But why? Why a 7? What stops you from getting to a 10? And that's when you're going to pull out some objections and you're able to kind of counter and move on from there. That's one of the things that like we said, like learning from the automotive business, it puts you in the spot where you can make those questions and feel comfortable about it.
Yeah, totally. We have a rule. We say no sevens, no
Yep.
lukewarm life. Like either be
That's
a
it.
6 and it's bad, or be an
Yep.
8 and then it's pretty close.
Yeah. That's it. Like seven's the worst number. I know it's what game is that? Craps or something like that. You want sevens? This is the opposite of that. We don't want any sevens.
Yeah, yeah. One of the things we've been doing with a couple of groups that's been working well is we'll go through the presentation. We'll get to the point where we'll lay out the really obvious next steps. And we'll
Hmm.
typically do it like in a slide, right? So they can see, hey, here's what you do next. You create your login, you register your investment, you do your accreditation letter, you actually wire, right? Like we'll lay out the next steps. We'll leave that slide on the screen and we'll just come and ask them the question and say, so where do you think we go from here? With that slide on the screen, we're making it really obvious what the next step should be. And they're either going to tell you their objection, which you can either handle then, or they're going to go, well, I guess it would make sense to, great, while I've got you on the call, let's make sure you can get logged in. Okay, let me make sure that you know where to go. And that question just takes some of the pressure off, but it's still a solid ask to be able to
Hmm.
say, hey, what do you think we should do next? Where do you think we should go from here? And so you're still asking, but not in this way of like, hey, Brandon, do you want to wire me 100K right now? It's like, whoa,
Hmm.
whoa, easy guy.
Yeah, exactly. Take me on a date first. That's kind of how it goes. But it's like I like that part, and I like keeping that up like that. And then I feel like once I get that commitment from those people, just making everything from there on out sound as easy as possible. Like, yeah, all you have to do, we run through this every day with accreditation letters. Like, it's super easy. Our team does this multiple times per week. And as far as like next steps from you, all you have to do is go through, sign a PPM. You're going to wire some money over. It's going to take a couple days for it to leave your account and come to our account, and that's it. Just make it just a smooth, easy transition, just so they know, like, this is how you guys operate your business. This is how we want to keep everything moving through the next steps, through communications moving forward. And that's kind of the next phase of investor relations is you're there to answer questions for people because it's not like people are going out and buying groceries. They're not spending 20, $30 or $100 nowadays. But like the next step is like you just gave me $100,000. Like it's not pocket change. Like I need to go to the next step and make sure you're taking care of me and I'm taking care of you. It's a hand in hand thing, which
Yeah.
is which is a big difference. Like we're talking going from car sales to being investor relations in this field.
Yeah. What's the biggest, like, I don't want to say difference because we know it's different, right? But
Hmm.
what did you do differently maybe when it comes to speaking to really high net worth individuals, right? Because but to me, that's probably one of the biggest differences is going,
Yeah.
okay, this is a different type of avatar. This is a different type of persona and person that I'm conversing with. Some people, are data nerds and they want to dig into every single detail in the numbers. Some people were more, alpha business personalities where they want to kind of like challenge and go back and forth.
Hmm.
What are you doing differently with having those conversations with high net worth people?
I think honesty is the key and just being upfront. Like if you don't know something, don't make anything up. Like they're gonna see right through the entire process. And it's not the worst thing in the world if you need to follow back up with somebody. Like obviously you want to move forward, you want to close and stuff like that. But there's 1,000 million questions that come up when you're dealing with multifamily, single family, anything along those lines. So understanding everything and being an extreme professional, I don't think anybody's gonna really know everything. But at the end of the day, honesty and being very upfront with people, I think, is one of the biggest things. I mean, dealing with high net worth individuals, I kind of take it as like you just try to treat everybody the same. And that's really what it is. And people are going to give you curveball questions. And one big thing that is an advantage for me, like I work from home. I don't really do any Skypes or FaceTimes or Zooms or anything like that with people. So it's just a phone call. Like it's just a normal, like you're picking up the phone on your buddy. And that's what you're going to do. And you're just going to pitch them and make that, if they feel comfortable, then you're going to be comfortable. And it kind of moves forward like that. So that's one of my biggest things that I've kind of gone with that, and having like some type of sales technique definitely helps. So
Yeah. I always say, like, when guys get stuck, the easiest default is to just go to, what would you say to your best friend? If you were talking to your best friend, if you're following up with your best friend, like, what would your response be? What would your text be? What would that phone call look like? How often would you do it? How much time would you let pass? I feel like that's such
mhm,
an easy way because it gets people to now treat people like people, right? And people that they trust and people they're going to be honest with. But what does it
exactly.
look like? Like, how do you do that day to day? When you say being honest, building trust with high net worth people, what does that look like on a day in, day out basis?
So one thing that I've kind of focused, it's kind of like, I wouldn't say like a feeling, but making sure your cadence is not too aggressive when you're trying to talk to these people. Like these people are executives, they're running businesses, they're managing people, they've got a lot going on. I mean, hopefully you're like top of mind for these people, but most of the time you're not. Like it's going to be something that's going on in the background for them. So it's just making sure like you're not hitting them call, text, email over and over and over every single day. Give them a couple days, and I like to end all my calls that I have with anybody. If somebody's committing 50,000, if somebody's committing a million, I like to end all my calls with, what's our next step? Do you want me to call you tomorrow? Do you want me to call you next week? Like where do we go from here? So you're just setting an expectation on both sides. And
Yeah.
that makes life easier. So
Totally. Yeah, I always say, like, you're thinking about them a whole heck of a lot more than they're thinking about you. And so just remembering that, like, hey, sometimes they're actually grateful that you followed up with them because they totally spaced or they forgot to send that email or they didn't forward it to the accountant or whatever it is.
yep. That's exactly what happened. We just had that happen with I think some lady who lived in Georgia. She committed like $250,000 with us, which to her wasn't too much money. But at the end of the day, she just went through and it just completely slipped her mind that she was wanted to commit to this and wanted more details. To me, I'm like, that's insane. But for her, like it wasn't just, it was like, hey, like this is just like 10 grand. I want to put somewhere here or something like that. She wanted to commit to us, but like you said, it completely was not top of mind, switched up, and that was it. So it was just, and every time we called her, she was like, "Oh my God, thank you so much for calling me." So you can't get scared before you make that phone call. Like they're gonna like curse you out the entire time because you're calling them every couple days. Like sometimes people need that reminder, and everybody's different. So you have to treat everybody differently and understand kind of how your flow and how your rapport is with that person at any given time.
Yeah. Yeah, I feel like I learned this lesson actually with you, where you and I were collaborating for a client and we kind of did two things at once. It was towards the end of a raise and we came up with a little bit of a game plan to kind of launch an assault on all the people who had not funded their soft commitment. And I think we were both surprised on how many people were like, "Oh yeah, I forgot to do that." Or like, "Oh, my CFO never sent that wire. Like, let me
Hmm.
call them."
Yep.
Like, I think it was like 500 grand came in the door just from those. And then we did it. This will be my last callback on automotive stuff, but knowing the finance background, right? One of the like sales psychology tools here is that the second sale is always easier, right? You can a 10 to 20% bump out of somebody at a way higher conversion rate than you'll make that first sale at. So
Mhm.
again, we kind of came up with a plan together of how could we ask for another 15%. And so hitting up some of the early on investors to say, hey, we're coming up towards the end of the raise. Just want to give you a heads up. If you wanted to throw an extra 20, 25 grand at this deal, we still have a little bit of room. Would rather give it to
Mhm.
you before we reach out to any new investors. And I think it was like another 600 grand or something that came in the door
Yep. Yeah.
because
And it was great because I mean, you're not paying any money in marketing for that. Like these people are all already in your database. So it's kind of win-win on both sides.
if I remember right, you can correct me if I'm wrong, but I want to say it was less than a week from start to finish on that, and it was over
Yeah.
$1 million came in the door with
Yep.
zero marketing spent.
Yep. It was literally just, hey, here's a call list of people that you're it's not none of them were a cold lead. So it was super easy. Like you already have a relationship with all these people already.
Hmm.
So that plus raising the capital plus no marketing, I mean, it's win-win-win across the board there. It was great.
Yeah, yeah, so good, man. Okay, you've worked for some powerhouse real estate investors, from Brandon Turner to Trey Stone. what have been some of the similarities you see? What are some of the differences? I mean, obviously, very different personalities, very different styles, even team size, right? Going from like a much larger team at ODC to
Yep.
a more like lean and mean team, it sounds like, with Trey Stone Real Estate Investing. Is
Yep.
that right?
That's it.
Yeah. What are some of the similarities that, regardless of personality, regardless of team size, is just
Mhm.
like through and through? If you want to raise capital, this is what the big dogs do, regardless.
Right off the bat, the two of them are just they're at a different level mentally because they're just both like visionaries. They
Mm,
know what they want, they know how to get there. They've done this before. So it's so cool to see how their brains work and how much information they can put out at you so quickly. That is like just phenomenal idea after phenomenal idea. Like it's just unbelievable the level that their thought process is at. It's pretty incredible.
Is there like a pace with that as well in terms of like speed?
No, it's rapid fire. It is drinking out of a fire hose at all times because there's so much good information from the two of them that it's actually really impressive just to kind of just sit back sometimes and be like, holy shit, like that's nuts. Like I did not expect any of that at all. So it's very cool. The biggest difference between the two is I would just say experience. Like Brandon's been doing it for a little while now. I think ODC's been around for like 5, 10 years or something like that. But Trey Stone's been doing it for almost 30. So Trey Stone went through that big market cycle in '07, '08. So just and he basically lost like I think like 20 or $30 million of net worth like overnight. So he was able to kind of ride that wave, kind of put his cleats on, dug in, rode his way through the end of that entire process and was able to come out a lot stronger mentally and just the knowledge that he gained throughout that entire process. So it was pretty cool just to see kind of both ends of that spectrum on there. As far as working for them and like the team size, Brandon Turner's team is big because they are basically, I want to say 90 to 100% vertically integrated. I mean, they run everything in house. They've got somebody to do everything as far as marketing, as far as capital raising, as far as property management. The entire team is there. So it's pretty cool just to see every piece of the pie do that. But when I transitioned over to Trey Stone, I started learning all those little intricacies here and there that like I wouldn't have learned if I didn't go move down to a smaller team. So I mean, at Trey Stone's team, I mean, we were like maybe less than 20 people or something like that, but 20 people like operating the entire operation. So it was pretty cool just to kind of collaborate more with people because on Brandon Turner's team, there's 100 people there. I'm not gonna be able to talk to all those people every single day. Like that's just not feasible. The majority of it was just you're speaking with the IR team predominantly. So now I'm just collaborating with everybody from Trey Stone to myself and back. So it's pretty cool just to see the differences and kind of making myself more well rounded throughout the entire process.
Mm, yeah. What's some of the stuff you noticed, like with the offerings, when it comes to, I think there's a couple of factors here. How do they differentiate themselves? How do they talk about themselves to stand out in the market? But also, what are the things that, like, a good deal is a good deal that they always have in common, right? And maybe this is more so for an investor to think through, like, what should you be looking for, right? What's that phrase? Like, what papers, what leaves do you need to turn over?
Hmm. Yep.
Leaves. One was like,
What
you're looking for
stones?
what's fading, right?
What stones you need left unturned? Is that what you're looking for? Something
Yeah,
like that?
yeah, you get what I'm saying.
Yeah, I'm picking up what you're putting down. So with that, I think when I transitioned over to working with Trey, Trey's super hands on with everything. Like he just really cares about all of it. And I think like he can walk onto any one of his properties and he knows the manager here, the groundskeeper there, the maintenance tech, and like every single spot. And now that Trey's starting to get a little bit bigger back into the market and stuff like that, like more videos are coming out and just showing like it gives you so much more confidence when you're investing with somebody like that because you know they care. It's not like they're just traveling the world and not caring about the property because that's investor money you're messing with. And you don't want to be kind of tiptoeing around and not really giving like the most accurate information. Like you want to make sure you're on point with these people's money because it's very important to them. I mean, for some of these people, it could be like some of their like portions of their life savings. Like you need to make sure like the ball keeps rolling, everything keeps moving forward, and people want to see progress. So that was one of the biggest things that I've seen, and the major differences with ODC and Trey Stone, just because Trey's kind of a one man show at this point because he can run through all the properties, knows everything up and down. But that was definitely like an eye opening part of switching over from ODC as such a large team to a small team.
Mm. Yeah, I had dinner with Trey a month ago, and one of the things I was most impressed with was really like he's so keen on investing in his area and
Yeah,
not really getting outside of that. Like he had no interest in a great deal in another market. He's like, no, I need to be able to touch it, see it, feel it, boots on the ground, be there, come in, like very different mentality than I think a lot of investors would take. To me, what really translated was just like his level of care that he was like, I care so much about the properties that I want to be able to be within arm's reach. Um,
exactly.
opposed to having something I have to get on a plane and fly to. Like even that, right, is too far for me.
Yep,
And
exactly.
to me,
That's
that's really
exactly right.
impressive. I think a lot of investors just look for the quick money, the fast money, great deal. And market, yeah, sure, we'll figure it out. And so I thought that was pretty impressive that somebody, even at his level, is still has that intense level of care around being able to be hands on with a property.
Yeah, and it's contagious. Like it kind of spreads through the entire team just because like if he's got this much care for what he's got going on, like I care about how much I'm doing my job because everything contributes to one another. And like just me making phone calls to investors helps him do his job and it kind of goes back and forth. And by him doing his job and getting all these videos and all this footage of whatever he's got going on in his properties, whether it's like just taking out trash, making sure the properties are clean. Like it just makes a big difference kind of from his end because then I can tell that story to our investors on the other side.
Yeah.
So it's very cool.
All right, let's go up like 10,000 foot view. What are you seeing today, as well as I think just over the past? How long have you been doing this now? 5, 6 years, 4 years?
It's things been just almost 4 years I've been doing it now. So
Okay. So, like, what have you noticed since you started till now in terms of trends? What's happening in the market? Obviously, it was a lot easier to raise capital 4 years ago than it is today.
yep.
But like, why? What do those conversations actually look like? Is it harder to just even get on the phone with somebody, or is there less money in the market? Is the money on the sidelines? What's happening that you're seeing?
I think a lot of it is money on the sidelines because people are just timid because they don't know what the economics is going to be tomorrow. Like everything's just fluctuating so up and down at this point in time. So it does make it a little bit tough. But I mean, I've been keeping this Warren Buffett quote like literally on my wall right here every day. Like, be fearful when others are greedy and be greedy when others are fearful. Like, it's such a great quote. And I feel like now everybody's real fearful with everything, but I think really you should be looking forward. Like, there's so much opportunity on the market right now with a lot of these multifamily establishments like going into foreclosure. Like, there's like the deal that we're wrapping up with Trey right now, like we bought that for just about 70,000 a door on 124 units in Houston, which is like unheard of for like a decent facility right up the street from NASA. So it's just a good spot with that too. So, but a lot of people, a lot of investors are also caught in a spot right now where they invested 2021, 2022, 2023, and those deals are not looking too out right now. Distributions are paused. Some of those deals are going belly up. Like it can be really ugly in those spots right now. So one of the things that I've been trying to do is just help people just discuss those situations because they don't have too many people to talk about it with besides like their operator that they're working with at that time. So just one thing that you could really think about is just dollar cost averaging. Like just because I mean that deal's going to be in the dumps, but I mean you might be able to kind of pick yourself up somewhere else. And the spot that with Trey right now, we're in a spot where we don't have any of those bad deals because Trey was able to like amass enough wealth to take some time off and raise his kids. And now we're jumping back into that, picking up on all these deals that have been foreclosed on. And like we're projecting really high returns. So it's a big difference between one end and the other.
From an investor perspective, what should they be focusing on right now based on all that?
What should they be focusing on?
Whether it's, how they stand out. One of the things we've noticed is like track record is such a big piece to emphasize, but there's lots of guys with track record. So how do you still continue to stand out if you're going to try to start raising capital? Like, let's say you've never raised capital before. You're like, gosh, I'm growing. Things are going well. I think it makes sense
Mhm.
to switch over, start raising from retail investor. I'm going to make the 506C switch. What would you recommend that they hone in on in this climate?
I think track record, like you said, is one of the best indicators of whether or not you're working with a good operator or not. Because you want to see, did they exit successfully from these deals? Did their investors all get paid? Did they break even throughout the entire process? Because nobody really wants to do that. Like, why would you let your money sit with somebody for 5 years just to get your money back? You can put your money in a bank and earn 3 or 4% right now. I mean, there's no real purpose of doing that. So, one of the biggest things I think is just going through track record, making sure that your operator knows what they're doing. And it's rare that you're able to do this, is try to get in touch with another investor that is within that company. But people ask, and sometimes some of our investors are willing to do so. But even if it is yes or no, it's always a good thing to ask to see if you can try to speak to somebody who's invested with the company, what their thoughts are, how investor relations treats them, and it kind of goes through. And the communication's key. It really is.
Yeah. So again, from that investor's perspective, based on the trends and everything that's happening, is there anything that they should steer away from? Anything that used to work that maybe doesn't work anymore? Like we both have seen guys who do a setter closer type model. We've seen guys
Mhm.
that go one call. We've seen guys that do a webinar to an IR call, webinar straight to the portal. Like, even just from a raising capital standpoint, what workflow is working well?
It's all got its ups and downs at this point, really. I mean, a few years ago when working with ODC, we would go through setter closer nonstop. And that flow kind of worked. But now people, it's harder to get people on the phone at this point, I would say. So if you're not as educated from the beginning on that initial phone call, where even if they have 3 minutes, if you can't get out some good facts and know what you're talking about within that 3 minutes, people are going to pick up on that and they're not going to want to talk to you again. So you need to be able to like be on point whenever they answer the phone. You need to kind of get to the nitty gritty, see if they're accredited, see if they're looking for any investments, dig in, ask the right questions right off the bat, and then kind of progress forward and see if you can try to set some type of preset meeting either like the next day or so.
What are you noticing from like an advertising perspective? Is the type of content matter? Is it changing?
So I think people are right now are trying to help their own deal out. So a lot of people are not raising as aggressively as they were in 2022, 2023. So I think we're kind of tapering off now and going to a more educational phase. So people are trying to understand exactly what's going on in the market, whether or not they should put their toes in the water or what they need to do. So, but education's key, I think, at this point for the field we work in.
Yeah. With the two founders that you've worked with, how important do you think it is that they have some kind of brand or reputation or known in the marketplace? Because I think even with Trey being out of the game for a minute, he still is a known player in the field. Some of these guys who are just getting into it, they're kind of no names when we look at the market. Like, they see a company name, they've been in business a couple of years, maybe haven't gone full cycle on a deal. It's like how much does that personal brand piece really matter?
It's huge. It really is because just having people know who you are and what you've done and how you got to the point where you're at, that's a massive difference for people. So raising money with Brandon Turner, I mean, Brandon Turner, when he first got started in the real estate space, he was on Bigger Pockets for 10 years. So he amassed a huge following with that. And then after 10 years of give, he finally asked. And that's when he was able to raise, I think it was like $500 million in order to purchase all the 13,000 units plus that he has at this point. So, but that's kind of new age right now where we're at. Trey Stone, like I said, he took some time off. And when he was raising the last time, I mean, he had like an AM radio show. So it was
Mentioned
kind of
this
like
to
a,
me later. He was like, the last time I did paid marketing, it was
yep.
AM radio. Like,
And
if I would tell
it's
people
like,
that, right?
yeah, it's tough because like sometimes you feel like you're just talking to a dinosaur and you got to like update them to like, hey, like this is Instagram. This is how it works. But no, he's picked up on it really quickly, and like you're starting to see some of the followers and everything starting to fall in line with that. But it just takes time. It takes time, and somebody who really knows how to work that market and what content is going to be the most appealing to people. But you have to. It's a fine line because you don't want to come off because the internet sometimes is just a joking manner, and you need it to be serious because like you're raising capital. You're taking hundreds of thousands of dollars from people. So you need to make sure you're in the right spot, but you need to have some good content, but some serious. So it's a tightrope that you need to walk in order to make sure you're doing it the right way.
Yeah, that's a great point because I think the audience being high net worth individuals is who you're after eventually, right? We're not chasing likes and follows. That's not going to help necessarily raise dollars.
Exactly.
So knowing, okay, I do need to present in a way that my ideal avatar would resonate with while also still getting enough attention to get in front of them in the first place.
Exactly. Like what's the point of having 10 million followers if you only got one investor? Like
Sure. Yeah.
there's no benefit there. Sure, there's a little bit of a benefit, but not much. It's
Yeah.
so
Yeah.
much
Well,
work.
you know,
It's
some
so
of
much
these guys
work.
that in the space that are younger who have
Yeah.
struggled to raise capital because
Yep.
their audience, their following is 20-year-olds, 19-year-olds.
Yep.
And so they don't
Yep.
have, they're not accredited investors looking to write
Exactly.
$2,000 checks.
Exactly. That could be the longest nurturing of your entire life is waiting for those 20-year-olds to become 40-year-olds. I mean,
Right.
that's a lot of money you're going to spend on that.
Absolutely. Oh man, this is great stuff. Couple more questions for you. When you came into, I guess, two cycles, right? Going from automotive to working with Brandon, and then going from Brandon to working with Trey.
Mhm.
What'd you learn along the way with each of those transitions? Because, while we've talked about some of the similarities, I'm sure there were some massive nuances or challenges. Or was like, this is different. Okay, let me figure this out. Let me wrap my arms around this one.
Yep. With each step, it's kind of just work your way through the process. You're at the bottom of the ladder and then just enjoy the ride because like you just learn so much from so many different people, just listening to what people tell you and just not being the smartest person in the room, I think is one of the best things, like best advice I've ever gotten was just because someone's always going to know something different than what you know. Like the backgrounds are so different throughout everything. And it's been cool. And like I said very earlier, like being able to be humble and work your way through that entire process and just learn and don't be afraid to ask questions, which I know it's a thing that everybody says, but it's so true. Like if you don't know just a stupid little nuance of something that you're doing, and it would make your life a million times easier, but you're scared once again to make that ask, just do it and just get over the hump. And it's like you said earlier, it's usually just all in your head. Like just move on.
Mm,
So that's been one of the coolest parts of switching from industries in my 30s, which is a tough thing that I feel like the generation before us didn't do. But being able to do that is kind of cool.
yeah. Oh, that's awesome. Okay, let's say you've got a great deal that you've personally locked up and
Hmm.
you are going to start raising money for it. What's the game plan? What do you do in the first 30 days, 60 days, 90 days to start raising? Let's say you got it's a little guy, $15 million raise. So this isn't warm network. You're gonna have to go out to the market, to the retail investor. What do you do on day one?
Date one, starting small. I feel like I'd reach out to family and friends and see if I can just do like a soft opening round like that. And then one of the biggest things, going back to car sales again, just asking for referrals is something that nobody does. And especially in the industry that we're in right now, like people don't ask for referrals. And just being able to go through, make your close, and then be like, hey, referrals is the biggest part of my business. Like number one, like you're not paying for marketing. It's all word of mouth. So people that trust you, you're going to relay me over to them and they're going to trust me. And that's the game in investor relations is you are selling trust. That's kind of the biggest piece of the pie. Because if people trust you, people will give you their money. And that's kind of how the whole process works through. But yeah, if I was to raise my own 15 million bucks to buy a nice multifamily for myself and my investors. Yeah, start family and friends, branch out from there, then start to obviously as the further you branch out, the colder it's going to be. But and then just go marketing and marketing myself and my brand itself.
Yeah, so let's say we get into the day 31. You've hit
Mhm.
your market, you've tapped them out. Are you pushing personal brand? Are you doing webinars? Are you running ads? What tactically, what did that look like?
What I learned with ODC is you gotta try everything. Everything as much as you can. You don't know when a text message is gonna hit and you're gonna get a whole bunch of people that respond to that. You don't know when a webinar is gonna be fantastic or tank on you. But you learn from all those different successes and failures along the way, you know, and you learn in order to get to the next raise or whatever you want to do, like raise 10 more $1 million or whatever you need. So that's kind of how you learn, and you have to go through. You're going to trip and fall, but you got to get back up and you got to get on the bike again.
Yeah. Awesome, man. Anything else? What would you do to close out the raise? Let's say last 30 days of the raise, what are you doing?
What we collaborated on was awesome. Like we said earlier, it worked so well, and I just didn't expect it to be as good. And it was the same thing. Get right back into that pool. People that you haven't talked to in 2, 3 months or something like that. They're like, hey, I got a couple more dollars that are available on this deal. Do you want to jump in or do you not? Like this is, and sometimes maybe you can offer them a little bit better terms to jump into the deal. Maybe instead of an 80-20 split, you give them an 85-15, something a little bit different just to kick them over the edge. But you and I were both surprised when we did that, the
Mhm.
return that we were able to make on that non-investment, because you're just literally just pulling from your own pool, which is great.
Yeah.
So
Yeah, I
that's
actually implemented this, I mean, it was probably a month ago, month and a half ago, with a client where we did just the double dip of going back to the guys that had invested within the first 2 weeks,
mhm.
making those courtesy phone calls to say, "Hey, I've got a little bit more left in the funds. Here's how long I think it's gonna take. Just giving you an update. This is how long until it would be closed. By the way, before I start calling new investors, would you want to put any more into this deal?" And day one, he brought in 600 grand.
It's awesome.
Like,
It's
it works.
phenomenal.
And so many
It
people
does.
don't touch it, don't even think.
Exactly. Even if you're on that phone call and that phone call goes south, where they're like, "No, I don't want to put any more money into this deal until I see some returns." What you can do is you can just turn that into a nurturing phone call. Just make sure you go to that call and like your guns loaded before you get there, but just make sure you're talking to them like, "Hey, this is what's going on with the property. We are at this X amount of occupancy," and like just give them an update and make it like a relations kind of call. So it makes it a little bit easier to go through the whole process. Whereas like you kind of have a pivot point of, hey, I want to put more money in, or hey, I just want to know what's going on with my money that's already in there. So then like it's never awkward on that phone call with those people.
Yeah. Yeah, for sure. Talk to me about the people side of it. So, again, we'll use our 30, 60, 90 days
Yeah.
scenario here with
Yeah.
raising 50 million. Who would you go out and hire first, second, third, right? When it comes to whether it's a vendor or an employee, are you hiring a data guy, relations guy, a marketing person? Who is it on day one? You're like, okay, I know I'm going to need this.
So day one, I'd start with two people. Like you need someone that's going to run your marketing, and you need someone that can be a closer, because the closer can also be a setter. Like so you can get a closer that's going to go over there and hammer it out in the beginning until they get to that point where they can just be a closer, and then you kind of branch off from there and hire more setters and kind of feed the entire process that goes through. But you need a marketer there so people know who you are, because if people don't know who you are, they're not going to give you any money. And then number two, you need somebody to jump on the phone with people, and you need somebody super personable that's going to know a bunch about the business and kind of go from there. So that's kind of the biggest two steps.
Nice. Anybody else you would add before the end of the race?
Before the end of the race, uh, probably an IR manager that would be able to keep a lot of data about what's going on, what's working and what's not working, and kind of have people below you to kind of patrol around and making sure all of your attention is going towards the right spot, which is kind of the biggest point. Because like if you're going through and you're just hammering through phone calls, you don't know where all the information is coming from. If you're doing Facebook advertising or just anything that's coming in organically on your website and you're not tracking any of that, you don't know where you're going for the next steps on your raise. You don't know what's working versus what's not working. I mean, that's a big differentiator of where you're going to spend your marketing dollars, and whether or not the money you're spending on your IR team is worth it or not.
Yeah. No, that makes sense. I've got a Now, obviously, it's different when you are ramping up versus you have a raise that's already going. But I've got a buddy that runs a fantastic marketing agency, and he all he does is 1 week tests. So he goes, okay, we're going to test one thing every week. And so this is obviously already up and running, but they just have a hypothesis. They go, we think if we do this, this is going to happen by the time we sit down and look at it next week.
Hmm.
Next week, when they look at it, they just go, okay, did that happen or did it not happen? And if it didn't, what's the new thing we're going to test? And if it did, they're like, great, how much more should we spend? And now also, what's the next thing we're going to test and start to refine?
Exactly.
And I think sometimes it's that simple of just going, make a prediction, put a timeline on it, and then evaluate. Did it work? Did it not work? Do we need to optimize it, do more, or do we need to fix it and try something different?
Yep. No, I completely agree. I mean, it comes down to just tracking like the little stuff. Like we track like email opens and email clicks whenever we're sending out any new information to people, and we know what's working and what's not working. And like if you're going to see a spike in something that you're sending out, obviously that's working. So you need to kind of jump off of that process and just make sure you're like honing down on whatever you're doing at that point and kind of just elaborate it a little bit more whenever you're like making your next steps. Like, is that Facebook money worth it? Is just sending internal emails worth it? Like, it just helps you make your next decisions. So the data is super, super important.
Yeah. Yeah. All right. Last question for you. New guy wants to get into syndicating, raising money. In today's market, is it worth it? Does it work? Is it going to work?
That's a tough, tough question. I will say, just because when I got into it, fortunately, the market it was a frenzy of people just handing you money at that point. So you're gonna get a little bit beat down in the beginning, just which is kind of a good thing because you have to learn all the intricacies of the whole industry. And you're not going to learn it unless you do it. And you have to have these conversations that are harder conversations. You're not going to know the answers, but that comes back to what we discussed earlier. Like, if you don't know the answer, don't make it up. Go back, ask your boss, ask whoever that is, come back. You just learned something. You were able to relay the message. And then you're kind of growing, you're helping your investor base out as well because you know you're being 100% honest. And that's kind of the biggest thing. Getting into it now will be tough though, because capital raising at this point in time is just a tough gig. Like multifamily is going through a bit of a cycle at this point in time where there's a lot of deals going into foreclosure, a lot of people losing some money. But if you're doing it the right way, you're getting with the right employer or you're starting to do it by yourself, just make sure you're as educated as you possibly can be.
Mm, yeah. And I think you mentioned it earlier too. It's a little bit of this idea of the jockey or the horse. If you're the right jockey, like you'll probably figure it out. But what I heard you say was you got to approach it not like investing in real estate how you always have. You have to approach it like this is a new thing you're going to learn. It's almost like
Yep.
pivoting asset classes. It's
Yep.
like, hey, we used to do single family, now we're doing multifamily. There's some new stuff for us to learn. It's like, hey, you used to raise money this way, now you're going to raise money this way. This is a completely new game, a completely new thing to learn.
Yep. But you have to be able to kind of take that on the chin sometimes of like, I don't know any of this. And
Yeah.
if you're not able to do that, that's going to make it a very tough transition. So just being open and like knowing what you don't know is a huge key to kind of moving forward and succeeding in the industry.
Mm, yeah. Great stuff, man. Dude, thank you so much for spending the time.
Of course.
Where can people connect with you if they want to invest in one of Trey's deals or if they want to check out what he's got going on? I'm sure you guys have stuff in the pipeline
Yeah.
be coming soon. Where do they go to see the latest offerings and how do they connect with you to talk about it?
Yeah. So you can go on treystone.com and my direct email address is just brandon at treystone.com. So pretty simple. We've got a new deal that we're going to be launching within the next few days. So definitely stay tuned for that. We're pretty stoked about it. Another deal in Houston with Trey. So he knows every corner of that city. So it's kind of nice to invest with him on that. So it'll be released pretty soon. But yeah, that's where we're at. So Brandon at treystone.com.
Awesome, man. Yeah, that's one of the things I love about him is that because he is so honed in on his market, there is almost a peace of mind of like nobody knows this area better than him. So if he's
Yep.
saying yes to this deal, there's a reason.
Yep. It's that, and he's done it for so long, and he's become very wealthy because of it. He doesn't need to go out and buy deals just for fees. Like he's buying deals because he wants to double or more our investors' money. So that's a crucial thing that you want to look for when you're looking for a new operator as well.
Yeah. Oh, that's great, man. By the time this comes out, I mean, you said it's a couple days away. By the time this comes out, that'll be
Yep.
live. So
Live and primed to go. So we'll be definitely raising capital in full swing at that point.
awesome. So by the time this comes out, call Brandon. He'll have some more info for you. Send him an email. Get him on the horn. Dude, thank you so much for spending the time. Love catching up. Love reminiscing about some of the automotive skills. I think there's more of that needed in the market. I think there's more automotive guys out there that don't realize the skills they have that translate so many other things. So
For
thank you for
sure.
spending, man. Appreciate all the insights. And I will make sure to link Brandon's contact info below so that you guys can reach out to him.
Cool. Thanks, Ian.
Holy smokes, there was a lot of different directions we could have taken that, but hopefully you got some value out of our conversation around where the market is at, who your first hire should be, tactically how to raise more capital, as well as a couple of hints on how Brandon and I raised over $1 million in less than a week with a joint effort that required no marketing spend. So if you need more help with raising capital, property management, acquisitions, construction or development, you can always hit us below. Go to reiboss.com. We don't teach real estate, we teach the business behind it. So we help you build out the operating systems so that you can start to run your business more effectively without being the only person driving it forward. So if that sounds like you and you are starting to run a 8-figure portfolio, you got multiple employees pulling you in different directions, be sure to hit the link below for reiboss.com to get more information on how we can help you out.